Ever get that feeling like you're at a party and suddenly the music kind of just stops? Everyone disappears.
Yeah.
And you're like, wait, did I miss something?
Yeah.
The main event already happened.
Yeah, I get that.
That's kind of how crypto feels right now, Like stocks are down, meme coins are, I don't know,
Gone.
gone. Yeah. And overall trading volume is down like 94%. 94. It's wild. Makes you think we're the really crazy crypto days behind us.
It's quiet. It feels like things have slowed down for sure. And I get why people might be thinking, whoa, was that it? Did I miss the boat?
Right. But here's the thing. What if this quiet, this kind of lull, what if this isn't the end? What if this is actually like the calm before the storm?
Okay.
What if this is like one of those huge wealth-building opportunities that only comes around like once in a generation?
Okay, I like where you're going with this.
I know, it sounds crazy, right? Like the kind of thing you'd see in a spam email. But think about it. What if this is like looking at the S&P 500 back in like the early 60s?
Right.
It was chugging along, didn't really seem like anything special, maybe even looked a little expensive.
Yeah.
But imagine if you just loaded up then, decades later. You'd be sitting on like 114x return, 114.
It's true. History often rhymes, and sometimes these periods of, I don't know, seeming stagnation, they can actually be the setup for massive growth. Like once the fundamentals catch up and the adoption really kicks in, boom.
That's the thought I can't shake.
Yeah.
Right? Like while everyone else is hitting the snooze button thinking they missed out, maybe there are these massive signals we're all overlooking.
Hidden in plain sight.
Exactly. So this deep dive, that's our mission. We got to cut through the noise, filter out all the distractions and try to understand what those signals are telling us.
Right. Because the potential gains here, these aren't small potatoes.
No.
We could be talking about returns in the like 10, 50, even 100x range for certain cryptos.
Yeah. I know that sounds like hypey, right? Like, come on.
It does.
But what if it's not? What if this is about seeing these big fundamental shifts happening? Understanding where the big money is going and getting into these like truly undervalued areas before everyone else catches on.
I'm listening.
And the best part is, you don't need to be a whale to play.
You don't.
Even a smaller amount, strategically placed,
Exactly.
could see some crazy growth. And that's exactly what we're going to break down. The key indicators, the institutional moves, the specific crypto opportunities, all that good stuff.
No jargon, just straight to the point, actionable insights. So you mentioned the S&P 500. Let's rewind the clock a bit.
Okay, so let's go back, like way back to 1962. Picture this. You're looking at a chart of the S&P 500, right? After some initial, like, ups and downs, it probably looked okay, steady, maybe even a little pricey to some folks back then.
Yeah.
But here's the kicker. If you'd invested then and just held on, fast forward to today, that investment would have grown by, get this, like 11,400%. 11,400.
Crazy. Right. But that's the magic of long-term growth, even when it doesn't feel like fireworks in the beginning.
Right, exactly. And to really grasp that kind of long-term growth, especially in a market as, I don't know, as crazy as crypto, we got to talk about how we visualize this stuff. You mentioned logarithmic scales before.
Yeah, logarithmic scales are super helpful because a regular chart, that linear view, it can make early growth look tiny while the later booms look vertical. Impossible, right?
Right.
But a logarithmic scale, it kind of smooths things out. It helps us see percentage growth over time in a way that's more like true to the actual trend. So that S&P 500 chart on a logarithmic scale, it doesn't look so crazy anymore. It just looks like this steady upward climb.
And this perspective shift, it's crucial when we look at Bitcoin. Because when you see Bitcoin on a regular chart with all the headlines screaming, bubble this, overvalue that, it can feel like, oh my God, the sky is falling.
Yeah, for sure.
But if you switch that Bitcoin chart to logarithmic, something really interesting happens. Suddenly, it doesn't look like this insane, unsustainable spike. It starts to look more like, surprisingly, normal growth.
Yeah.
Like it's following a pattern, you know?
A pattern we've seen before.
Right. And this logarithmic view, it also helps us understand this whole cyclical thing with Bitcoin. Those green bands and red bands we always talk about.
The heartbeat of Bitcoin, right?
Yeah. So the green band, that's like the chill zone. Low activity, prices are kind of consolidating. It's the bottom of the cycle, right?
Yeah.
But the red band, that's where the party starts. That's where we see the peak of a bull run. And check this out. Bitcoin just recently dipped its toes into the lower end of that red band. But historically, at the end of its 4-year cycles, it's always traded fully within that red band, hitting what's called the terminal value.
Right, the peak price expectation for that cycle.
Yeah, exactly. And this time around, It hasn't quite done that yet.
Interesting. Which means, potentially, there's still room to run within this cycle.
Right. And speaking of cycles, we got to talk about halvings because they play a huge role in this.
No.
For anyone who's new to this, a halving is basically a pre-programmed event that cuts the rate at which new Bitcoins are created in half.
Yeah.
Historically, this has led to supply squeezes, and guess what?
Price surges.
Bingo. So the last halving happened back in April 2024. And if we look at the average time between a halving and the peak of a Bitcoin cycle, it's about 532 days.
So if we do the math.
Yeah, do the math. A potential peak could be around, get this, October 2025. Now, on a regular price chart, the kind of move Bitcoin would need to make to hit that terminal value, it looks insane.
It does. It looks like a straight vertical line almost.
Right. But then you look at it on that logarithmic chart,
Yeah.
and suddenly it doesn't seem so far-fetched. It looks, well, more achievable, more in line with how Bitcoin has historically grown.
It takes the fear out of the equation, right?
It does. It gives you this, like, long-term perspective. It's not just about the daily ups and downs, you know? Okay, so we've got this historical perspective. We're looking at cycles, halvings. But there's another big piece of the puzzle here. Liquidity.
Ah, liquidity,
Yeah.
the lifeblood of the market. It's like the fuel that keeps everything running.
Right. Think of it as the amount of available money flowing into the system, both globally and within specific countries. Like the U.S. Federal Reserve's balance sheet. That's a key indicator of U.S. liquidity.
Right.
And when there's a lot of liquidity sloshing around, it tends to find its way into, well, everything, right? Stocks, crypto, real estate, you name it.
And we've seen how closely liquidity injections are tied to big market moves. Look at the 2008 financial crisis. Market tanked, right? But then what happened?
Massive liquidity injections. The Fed stepped in, central banks around the world pumped money into the system, and boom, a recovery. And then a pretty epic bull run in the stock market. Same thing happened during the pandemic crash in 2020. Market crashed, liquidity floodgates opened, and then another bull run, with Bitcoin leading the charge early on.
So the million-dollar question, what's the liquidity situation looking like now?
Well, it's interesting because we're actually seeing some weird divergences. There's this nervousness in the stock market, right? Concerns about trade wars, economic slowdowns, all that fun stuff. And that's led to a pullback in some areas. But here's the thing. U.S. liquidity is actually starting to shrink, but global liquidity overall is actually trending up.
That's a fascinating divergence. What do you make of it?
I think it sets the stage for a couple of potential scenarios, both of which could be good for the markets, including crypto. So scenario one, that the economic worries fade away, things start looking rosier, and boom, we see this immediate bullish rebound. Everything takes off.
Okay, and scenario two.
Scenario two, things get worse, the market takes a bigger dip, and then to try and save the day, what happens? Another round of massive liquidity injections. This time, maybe it starts at the global level and the U.S. follows suit.
Either way, it sounds like a potential recipe for asset price growth in the medium to long term.
Exactly. And that's the key takeaway here. The market moves in cycles. And regardless of whether we see a bounce from these levels or a dip followed by a recovery, with all this liquidity floating around, the conditions seem to be in place for some serious upside.
It's all about positioning ourselves to ride that wave when it comes.
Right. And that brings us to, I think, one of the most compelling areas in crypto right now. Real-world assets, or WAs.
RWAs. This is where things get really interesting. But before we get into the nitty-gritty, for anyone who might not be familiar with this whole RWA thing, what exactly are we talking about here?
Okay, imagine this. You take real-world stuff like real estate, gold, oil, bonds, tangible assets, and you represent ownership of those assets on the blockchain through these digital tokens. The idea is to make these traditionally illiquid markets more efficient, more transparent, more accessible. Imagine being able to trade like fractions of a skyscraper as easily as you trade Bitcoin.
That's the vision, right?
Yeah. And this isn't just some pie-in-the-sky idea anymore. The big players, the institutional money, they're all over this.
BlackRock, for example, has been making some serious moves in this space.
BlackRock is going all in. They're building their own platforms, investing heavily in the infrastructure to make all this happen.
And they see the potential, right?
Oh, yeah. And the projections for this whole industry are mind-blowing. We're talking about estimates from Citibank, BlackRock themselves, saying the RWA market could hit $30 trillion by 2030. $30 trillion. That's insane.
That's a lot of zeros.
It's a lot of zeros. And it reminds me of like the early days of layer one blockchains. Ethereum, Solana, Cardano. These became the foundations for a whole new wave of decentralized applications, and their valuations just exploded.
Yeah, I see the parallel. So the big question now is, What's going to be the dominant layer one for RWAs?
Right. Like, who's going to be the Ethereum of the RWA world?
Yeah.
And there are a few projects that are really standing out. Ondo is one that's been on my radar for a while. They're really positioning themselves as the go-to layer one for RWA tokenization. And they've got some serious backing from institutional players, which is huge in this space. Because when you're dealing with regulated assets, you need that credibility, that trust.
It's not just about the tech anymore. It's about who you're partnered with, who's backing you.
Exactly. And Ondo's got a killer lineup. BlackRock, Morgan Stanley, Coinbase, Curve, some serious heavy hitters.
Impressive. And what kind of price action are you seeing? What's your outlook on Ondo?
Well, here's how I'm thinking about it. If we see another market dip, and Ondo's price dips below 50 cents, maybe even below 40 cents, that could be a great entry point. Even if the market just bounces back a little, early investors could be sitting pretty. Now, if this whole RWA thing really takes off, and Ondo captures even a tiny slice of that multi-trillion-dollar market, let's say 1%, with a valuation in the $20 to $40 billion range, we could be looking at a price of like $2 to $4 per token. That's potentially an 8x return from those lower entry points.
Okay, that's a solid return.
Now, if they can grab a 1 to 2% market share, similar to some of the bigger layer ones, we could see prices around $16. That's a 35x return. And then there's the super optimistic scenario where they dominate and the upside could be even bigger, but even shooting for that 10 to 20x range, that's a pretty attractive risk-reward profile in this space.
For sure. It's all about finding those asymmetric opportunities.
Right. High potential upside, manageable downside risk. It's a sweet spot. But always remember, folks, do your own research. This is crypto, it's still early, and things can change fast. All right, so Ondo's one to watch. Another one that I'm keeping an eye on is Aum. They're focused on tokenizing real estate, specifically in Dubai.
Dubai, that's a hot market.
It is. It is. And Aum seems to have that first mover advantage in that region.
Makes sense.
They've got some interesting partnerships too, although maybe not as many household names as Ondo. But here's the thing. Even if Ondo becomes the big dog, the whole RWA narrative gaining traction should lift all boats, right?
A rising tide lifts all ships.
Exactly. So with Aum, I'd be looking to get in around $2 to $3, maybe even down to $2 if we see a big market dip.
Okay, so playing the dips.
Playing the dips, yeah. Because they already had a pretty big run-up, and we typically see this pattern: launch, retracement, then another surge.
Okay.
So patience, right?
Patience is key in this game.
It is. And if Aum becomes a key player in the RWA space, capturing even 1% of that market, their price could easily go to $20 to $25. That's a potential 10 to 15x return from those entry points. And they've already hit a market cap of over $6 billion. They were in the top 20 cryptocurrencies at one point, and get this, they're not even listed on Coinbase yet.
Oh, wow. That's interesting.
Yeah, so if they do get listed on Coinbase, that could be another big catalyst. Okay, so we've got Ondo, we've got Aum, but there's this other piece of the RWA puzzle that's crucial, and it's often overlooked: data indexing.
Data indexing. That's how we make sense of all the information on the blockchain, right?
Right. It's like having a super fast search engine for the entire blockchain. And one project that I think is super interesting in this space is Subsquid.
Subsquid. Okay. Tell me more.
They're kind of like a smaller, more under-the-radar version of the Graph, which has a market cap of like $8.5 billion. But Subsquid's market cap is way smaller, around $44 million. And they've got some serious investors backing them, folks who are focused on building the core infrastructure of the blockchain world.
So why are you so bullish on Subsquid?
Well, think about it. We've got potentially trillions of dollars flowing into RWAs, and the need for data indexing is only going to grow, both for RWAs and for AI. And Subsquid is right there, ready to capture a piece of that pie.
Makes sense.
In traditional finance, you've got companies like Snowflake. They handle data warehousing on a massive scale, and they're valued at around $50 billion. Now, if Subsquid can carve out even a tiny slice of that demand in the crypto space, a valuation of $500 million to $1 billion doesn't seem crazy at all. And that translates to potential gains of like 10 to 75x from their current market cap.
Wow, that's a huge potential upside.
It is. But it's higher risk, for sure. It's a smaller project, so there's more volatility. But the potential payoff, if this whole RWA and data infrastructure narrative plays out, could be massive.
Okay, so we've talked about these kind of newer, higher risk, higher reward plays. But what about the more established cryptos, the blue chips, so to speak?
Right, the OGs. It's exactly. So Bitcoin, we talked about this earlier, still has potential for a 3 to 4x return to its previous cycle highs. Ethereum, if it can finally get some momentum going, could also see similar gains, 3 to 4x. And Solana, which has taken a bit of a dip recently, I actually see that as a buying opportunity. I think Solana still has the potential to hit $230 to $250, maybe even break past its previous cycle high. The market just loves Solana when things are going well.
It's got that hype factor.
It does, it does. All right, so those are the blue chips. Now, for the more speculative stuff, Dogecoin, the meme coin king, that's all about risk-on sentiment. If the market gets really frothy again, a 5 to 8x gain isn't out of the question. XRP, I'll admit I was a bit too bearish on this one in the past, but it's gaining traction, adoption is increasing, and with regulatory clarity potentially on the horizon, a 2 to 5x return to its previous cycle high seems reasonable.
Okay, what else?
We've already talked about Ondo, potential for 7 to 10x from a dip buy. Teo, it's not looking super bullish on the charts right now, but if the market really takes off, a 5 to 10x gain is definitely possible. Airdrum, we've discussed this one before, could potentially do a 5 to 10x if this cycle really gets going.
Okay.
Grass, it's a data scraping plugin that's aiming for a $1 to $2 billion valuation, so there's potential for a 6 to 7x return, maybe even more. And IronNet, it's a play on cloud computing, currently trading at lower levels, could see a 5 to 10x return if the market picks up steam. So, yeah, there are a lot of potential opportunities out there, but it's important to be strategic to manage risk.
Right, absolutely. So how should people be thinking about their portfolios? How do they allocate their capital?
This is how I approach it. Think of it as two buckets. You've got your core portfolio and your casino portfolio. Your core portfolio, that's your foundation, mostly Bitcoin, maybe some Ethereum, Solana, those higher quality, more established altcoins. This should be the bigger chunk of your crypto holdings, maybe 70 to 80%. And then you've got your casino portfolio, which is for the higher risk, higher reward stuff.
Yeah.
The smaller altcoins, the emerging narratives, the stuff we talked about earlier. And with this bucket, diversification is super important.
Because not every bet is going to pay off, right?
Exactly. Some of these projects are going to go to zero. It's just the nature of the game. But the idea is if you've got, say, 10 investments in that higher risk bucket, and even if 7 of them don't work out, if 3 of them hit those 15 to 20x returns, you're still going to be way ahead.
Right. You only need a few winners to make up for the losers.
Exactly. And then the key is, as we get closer to the peak of the market cycle, try to take profits on those higher risk positions. Lock in those gains. And then you can reevaluate and potentially get back in at lower prices in the next cycle.
So it's all about playing the cycles, managing risk, and not getting too greedy.
Exactly. And for those who are just starting out or maybe looking to add to their positions, the potential for long-term growth in this space is still huge.
It is, especially if you're patient and strategic about it.
Let's say you start with a modest $500 and you spread it across a few of these higher potential plays. And let's say you get lucky. Just a few of them hit those 15x returns we talked about. That initial $500 could turn into $7,500.
Not bad.
Right?
Not bad at all.
And then if you just consistently add a little bit each month, maybe $250, and you keep allocating it strategically, you could be looking at some pretty serious wealth down the line. We're talking hundreds of thousands, maybe even millions of dollars over the next few decades. It's about playing the long game, taking advantage of these cycles, these opportunities, and not just blindly chasing hype.
So to recap, even though things might seem quiet in the crypto world right now, there's actually this huge potential brewing beneath the surface. We've got historical cycles, global liquidity, and this whole RWA narrative that's just starting to gain momentum. The key is to look beyond the short-term noise and understand the bigger trends that are at play.
Absolutely. So here's a final thought to leave you with. Where, in your own understanding of the market, right now, in this quiet moment, might you be missing something? What are you overlooking? What emerging narratives haven't you fully explored yet? It's all about keeping an open mind, staying curious, and being ready for the next wave.
Because it's coming.
It's coming. And if this deep dive has given you some food for thought, well, you know what helps us keep bringing you this kind of analysis. A quick like, a share with a friend who might find it useful, and most importantly, hit that subscribe button so you don't miss our next deep dive into the future of finance. Thanks for joining us.
Thanks, everyone.